Hello and welcome to an introduction to cryptocurrency trading. So what are you going to get out of this course? Well, I'm going to give you a high-level overview on the cryptocurrency landscape. I'm going to give you introduction to how it actually works, not just some of the technologies that you need to be interested in, but also some of the more overreaching market nuances, okay? So let's get to it. The first thing we're going to talk about is the opportunity within cryptocurrencies. You wouldn't be interested in this space if you hadn't heard about Bitcoin up at 20,000, Bitcoin at 10,000. However you got involved in this and whoever told you about this, the opportunity is fascinating. There's brand new technology involved. It's being adopted by large corporations, albeit at a fairly slow rate, so you are still early. This is still an early entry. This video is being made in December of 2017, and I believe 2018, even into 2019, there still could be some good gains in this market. So short term, you can have very huge gains, and it's very interesting technology. If you want to be involved with learning about the blockchain and the Tangle, then you can go ahead and do that and you can become someone that's very knowledgeable in this space and maybe even turn it into a career. Now, over the long term, you have a lot of gains to be had in the market itself just by trading. You also have an opportunity to buy and hold and give wealth to kids and grandkids. That's something that's not often spoken about. Also, there's lifelong learning, like I talked about a minute ago, regarding, hey, if you like the blockchain, if you're tech savvy, maybe you turn that into a career where you start developing things on the blockchain, because they're going to need programmers for this, folks. It's not just about trading. There's also an opportunity for a job. So next up, what's the scene with cryptocurrencies? This is something that's not often talked about. People have to find this out the hard way. Well, Bitcoin rules. Bitcoin is kind of like the overall bully in the space, if you will. And it's kind of an interesting dichotomy you have. When Bitcoin runs, altcoins fail. They actually go down, because what happens is a lot of altcoins are priced in Bitcoin, and I'll show you that towards the end when I look at some charts. So when Bitcoin goes up and really starts to run, altcoins fail because a lot of that money moves into Bitcoin, because everyone's like, Bitcoin's running again, we've got to get in. So that's kind of something that happens there. And at the same time, when Bitcoin falls, altcoins fail. It's very strange. You would think that the money would flow back into altcoins. And it's starting to get better, but as of this moment in time, when Bitcoin just is failing, so are all the other cryptocurrencies, and you kind of have to step aside in that marketplace. When things run is when Bitcoin is just steady in a longer term uptrend, is when Bitcoin runs. So what is an altcoin? An altcoin is anything other than Bitcoin. You're going to hear about Ethereum, Litecoin, all kinds of other coins. Those are the big three. And altcoins are probably going to have the most gain going forward. Bitcoin has had massive runs, and it will continue to have some more massive runs. But if you're involved in some leading altcoins, they will have spectacular moves more often than Bitcoin does. Although when Bitcoin moves, everyone tends to move into Bitcoin, hence my Bitcoin rules over there. But if you're in altcoins, you have more of an opportunity to actually kind of move your money up in a much quicker fashion. Bitcoin will do that, but it will do it in spurts. Okay? And keep in mind, there's also over 1,000 altcoins versus just one Bitcoin. Now, where do you trade? Where can you actually go about putting your money into the market, your US dollar, your euro, wherever you're from, and how do you buy your Bitcoin, and then what do you do with that? Okay? So if you're in the United States like I am, you pretty much are going to buy on Coinbase. They're going to charge you a 1.5% fee. So if you put in $10,000, they're going to charge you $150. It's the barrier to entry. And then you're going to have some Bitcoin. And the next on my list here you see is GDAX. Never sell anything in Coinbase, okay? I'm going to mention that up front. Never sell in Coinbase. Buy in Coinbase because you have to, and then move it instantly to GDAX, okay? There's some tutorials online how to do that. That's not involved in this video. I may do that in a later video. Check out my channel for that. Just search GDAX, and maybe it'll be up there when you're watching this. But never sell on Coinbase. Move it instantly to GDAX or some other platform, because Coinbase will charge you a 1.5% fee just to sell. And I've noticed they say it's 1.5%, but they're liars. It's 3%. So they're really gouging in that aspect of it. If you move it over to the GDAX, You can actually trade for free if you do limit orders. If you do market orders, they charge you 0.25%, which is at least manageable. Outside of that, Bittrex is probably your exchange that is going to give you the most exposure to the most coins. Something you're going to find about cryptocurrencies is that they don't all trade on one exchange. For instance, there's a leading coin called IOTA, and IOTA, as of right now, only trades on Binance and Bitfinex and a couple other smaller exchanges. It does not trade on Bittrex. So if you have a lot of money in Bittrex and IOTA is making a move, you cannot participate. You're going to have to open an account with Binance or Bitfinex, but if you're in the US, Bitfinex doesn't allow you to have an account. So we're still in a very immature market in the cryptocurrency space. It's still the Wild West, and so these exchanges are kind of a pain point. Now, if you're new to trading, I want to give you a little bit of an insight into what you're getting yourself into, okay? Trading is a profession like any other type of a profession. It's like, I'm going to liken it to being a doctor and the fact that they have lots of years of schooling before they can make tons of money. And crypto is the same way. Trading in general is the same way. It's like anything. It's a profession. So, but the hardest part about this profession isn't actually trading, isn't the charts. That part's fairly simple. It's about managing your emotions. And that's what a lot of people aren't going to tell you. When you're new to trading, your problem isn't how to read charts. That's going to come. That's going to come with time. That's going to come with effort. And people learn to manage emotions too late, usually when their account is gone. Okay? You will lose your account very, very quickly if you don't know how to manage your emotions in your trade. You are the hardest part in trading. Okay? This all comes down to decisions based on technical analysis. And it's your decisions. The chart's the chart. It's going to be there. You have to do what the chart is telling you to do. Now, part of this is fear and greed. When things are running or things are failing, you're going to be scared, or you're going to think this is going to go to the moon and I'm going to make me $1 million, okay? Neither of those are going to be true. At any given moment in time, if you're scared, is probably, you should think about buying. You don't buy blindly, but you think about, okay, I'm scared. Is this a good time to get in? And the charts will tell you that. And the greed part of it is that if you're up 20, 30, 50, 100, 200, 400% in a trade, you think it's going to continue. And what happens is you hold on to these coins until they come all the way back down to your entry point, and sometimes you even sell at a loss just because you're being greedy, because you want more. I always want more. That's what you're saying to yourself. And greed is good to a point. I'll just say greed is good to a point. And then you're going to hear terms like FOMO and FUD. FOMO is fear of missing out. What that means is that you have a coin that's up a lot, and you've missed a proper buy point, but you want to get in on the run, so you buy at the top. And then usually when that happens, the coin reverses, goes down. Now you're sitting at a loss. And that's kind of FOMO. FUD is basically fear and doubt. I forget what the U stands for, but it's fear, uncertainty, and doubt. There you go. So FUD is, oh, I don't want to buy Bitcoin. It's at 10,000. It's too high. Okay, who says it's too high? You know, I have a couple of videos on my channel that talk about Bitcoin at 5,000 going to 1,200 and Bitcoin at 11,500 going to 3,000. That could create some FUD for you, and those videos aren't meant to do that, but you as an individual have to regulate your own fear and doubt. That's your job. That's not my job, okay? When I put videos out like that, I want to inform people and say, hey, these are some possibilities. But it's your fear, it's your doubt. You can't ever trade someone else's plan. All right, so learn charting. So you have to learn to chart, because in cryptocurrencies, if you're going to trade cryptocurrencies, you have to learn how to read the charts. You have to learn how to read them because they're showing you who's buying and who's selling. Now, when I say who, I don't mean an individual. I just mean generally people are buying and selling. And volume is the key to this. And you'll see me talk about this time and time again on my videos. The volume is high, the volume is low. Look at this volume. Volume is very key, and you have to learn about volume and how to read it. And you have to put the time into charting. It's not instant. It's not super difficult, but there is an art to it. This is the art part to trading, and it's going to take some time to get good. So, and hodling, outside of trading up and down, you can actually just hold your coins, okay? Now, hodling stands for hold on for dear life, okay? And that's what hodling stands for. And you're buying and you're holding no matter what. So Bitcoin recently had a run from 10,000 all the way up to 20,000. That's a good time to hodl. But are you still hodling at 20,000? What if it comes back down to 10,000? Are you going to hold? Okay, you have to understand that about yourself. You have to know, is this a 5-year investment? Can I not look at this? If you're going to hodl Bitcoin or other altcoins, I personally would not want to look at the chart every day. I would maybe check it once a week, maybe check it when there's headlines, but you have to understand your time horizon, okay? And hodling can pay off big. We've had Bitcoin's been up 5,000% from the lows since the previous high in 2013. So the previous high in 2013, it came down to lows in 2014, and now in 2017, we're up 5,000%. So if you've been hodling since 2014, congratulations, you've made a ton of money. So it can pay off big, and many will succeed with this method, but it has to suit your personality type, and you have to have the wherewithal to be able to sit through those types of moves to the upside and to the downside. Because keep in mind, I just said in 2013 it didn't move again. Well, I didn't say this, but when it topped in 2013, it didn't bottom until 2014, and then it didn't move again until 2015. So you're holding for 2-3 years. You have to be ready to do that, okay? You have to be ready to live with no returns. So what about the technology in cryptocurrencies? Well, the technology, you have to get used to it. It's a bit of a paradigm shift. It has its own take on things. It has its own language. Like I was saying, trading is a profession. You have to learn the ecosystem. So you're going to have many different wallets if you're going to trade. You're going to have paper wallets, hardware wallets. You're going to hear about Trezor, Ledger X, all these different things. And you can learn about those technologies, but you need to learn a little bit about wallets. These are where you're going to hold your coins, okay? When you buy Bitcoin, how do you hold Bitcoin? Well, you do it in a wallet, and this goes for any other cryptocurrency. They all have their own wallet, and they all have very specific addresses. Now, if you have those, if you go back to my exchanges here, where Coinbase, GDAX, Bittrex, Binance, Bitfinex, they're on the right. Each of those are going to have different addresses, so you're going to have different wallets in each of those exchanges that you choose to have an account in, and those will hold your coins, and you can transfer between those wallets, between exchanges, okay? You can just move money about. It takes a little bit of time, somewhere between 30 minutes to an hour in the case of Bitcoin, and at least right now in December 2017. Others, it goes much faster, but it just depends how you want to transfer. Keep in mind, you are going to have many addresses. It is very important that you get your address correct because transfers are generally not reversible. This may improve in time, but generally transfers are not reversible, and you need to pay attention when you're doing this. Pay close attention, take your time, copy and paste, double check the first 4 characters and the last 4 characters. That's what I do at least before you make your transfer, okay? Now, private keys, each of these addresses come with a private key associated with it. It's kind of like your house. You have each house has its own individual public address, but you have a key to your house, and that's your private key. If anyone has your private key, they own that address. So if you go to Coinbase or GDAX or Bittrex, you don't own that account. They own that account, and you may not necessarily ever know the private key to that, okay? There is a way to know your private key. You can get a hardware wallet, you can get a paper wallet, and these are generated online, and you can go ahead and keep your private key. But if you lose that private key, you lose your money, okay? You can't get into that house without that key. You can't break a window. Cryptocurrencies have evolved around security, so you can't even hack your way in. And that comes into play a lot of times with forks. So you're going to hear about forks, and I put this in with wallets just because they're really akin to the private keys. Bitcoin is forked a number of times, and in order to participate in those forks, you have to have the private keys, okay? So this is another reason to keep some of your coins off of exchanges and in other types of wallets where you have the forks, so you can go ahead and get that. You can go ahead and get those free coins, and I'm not going to go into forks. Exchanges, it's still the Wild West. We talked about that a little bit, okay? You don't have any guarantee with these exchanges. There has been instances of exchanges getting hacked. There have been instances of exchanges going down. I mean, just down. In 2013, there was one called Mt. Gox. You can go ahead and Google that. That just wiped out I don't know how many millions of dollars in value, and it's just never come back to my knowledge. You're going to have to enable two-factor authentication with most of these exchanges. And if you're on Bittrex, I have a video in here about how to get your Bittrex account back. They will close you out, and as of December 2017, they're not very good with getting your account back open. So you must enable two-factor authentication on most of these. It also will help you with security so your account doesn't get hacked and they cannot move your coins out in case you have an insecure password. Two-factor authentication will help with that. If you do that, Google has an authenticator, and I will say this, if you are going to use the two-factor authentication, which you're going to have to, you really need to write down or take a picture and store those pictures of the two-factor authentication address, because if you lose that, you can't get into your account. Okay, so what this is referring to is that when you enable two-factor authentication, you're going to download the Google Authenticator app, and then in that app, you're gonna say, plus to add a new address. It's going to show you a QR code on the screen from I'm going to use Bittrex. You click on two-factor authentication. It's going to show you a QR code and a code, an authenticator code. Take a picture of those, write those down, do something, but keep those codes you see on the exchange, because when you leave that screen, you will never see that code again. And if your phone dies, if your phone is stolen, and you need to clear all that stuff out and enable everything in a new phone, you are not going to be able to log into your account because you're not going to get that authenticator password back. That authenticator address you're going to have to write down and put that in the new phone. Does that make sense? Okay, so security is big. Make sure you have a good password. Make sure you have two-factor authentication. And being locked out is what I talked about with Bittrex. They will lock you out. I know guys that have been asking me because they've been locked out for months in their Bittrex account. So also, Bittrex does not allow you to have two accounts, so that's just something to be aware of as well. And software, how do you view cryptocurrencies? There's a lot out there, but there's only a few really good software. TradingView is a very good software. Coinigy is a very good software. Most of the apps for your phone really suck, and you can actually shapeshift. I put this in with software. I don't know why, but you can shapeshift your coins. It's kind of like an exchange. But that is a software where you can literally say, hey, I have Ethereum and I want to make it Litecoin, and it'll shapeshift it for you. But that's a software on your phone typically as well. They do have web apps for that, but usually you'll do that on your phone. So Coinigy, I have a link down below in my description. If you check that out, Coinigy has a really good alert system if you want to be alerted to moves. And TradingView has excellent software. I'm going to walk you a little bit through TradingView. All right, so information. Where do you get information on cryptocurrency? Well, in 2017, 2018, 2019, it's the social media. So, YouTube, chat rooms, Twitter, that's the community that's kind of been around. Reddit should be on there. I failed to put that on the slide. Reddit is a good source of information. You can read some things on there. CoinMarketCap, though, is a huge resource for you. Go to coinmarketcap.com. There's lots of information. It's going to show you everything by market cap. It's going to show you exchanges, prices. You can sort movers on the day or by the hour. Very, very good resource. Go check that out. News and rumors. I want to go ahead and address this in information because you can't buy strictly on the news, okay? You're going to see a lot of headlines that people, not even necessarily you, but people are going to be excited about, and you have to weigh that information, okay? So take everything with a grain of salt, avoid the noise, and avoid the FUD, okay? Trade the charts, trade what you see. Now, what are the difficulties in the crypto market? This is a very important slide, and thank you for staying with me through this. Cryptocurrencies have three main things that I've identified that are kind of very difficult. It's a 24/7 market, folks. This thing never closes. The stock market at least closes, gives you weekends to rest and recoup and kind of evaluate. Cryptocurrencies are 24/7, and things run at different times. You have the Asia Open, the US Open, and the Europe Open, and each of those time frames can have their own market moves. Now, I'm in the United States, and usually things move at 2 and 3 a.m. my time, and I'm asleep sometimes, so I will miss moves because my trading strategy does not allow me just to blindly purchase something at a preordained price. So I'm going to miss out on some moves due to that, and I have to accept that as part of my trading strategy. The parabolic moves in Bitcoin and altcoins is good and bad, because you're going to get these parabolic moves in altcoins on a weekly basis. Not all of them, obviously, but one or two of them here and there. They're going to pop and they're going to rise quickly, and you're going to get excited, and you can get into a lot of trouble that way. That goes into the fear of missing out, and that's where the quick tops come into play, because if you buy those tops, if you don't buy it of a proper base, then you're going to get you're just going to get destroyed in the cryptocurrency market by buying parabolic moves. Failed breakouts. Now, you're going to learn to buy breakouts, you're going to learn to buy over resistance points, and when this happens, there's going to be a lot of failed breakouts, especially in the smaller coins. If you have a well-defined pattern in a very good coin, odds are 50-50 the breakout's going to work. But a lot of the smaller coins and coins that are sitting at lows that haven't broken out yet, they're going to fail breakouts time and time again, and you have to be aware of what to do in those circumstances. The reason being is because there's no institutional balance in the market. In stocks, usually breakouts can be supported by institutions. In cryptocurrencies, we're not quite there yet. So not all breakouts work. Some go up and some fail. And they also test everything several times. So you're going to see the same levels tested before things actually break out. And that's about it, guys. So yeah, so there you go. Watch the video again. It's a 21-minute long video. I guess that was a real quick introduction, but you got a pretty good view of the space. You got some information. You got to know a little bit about the technology. If you're new to trading, here's some things to look out for. Here's kind of the general scene, if you will, and the opportunity in trading cryptocurrencies. So please subscribe and check out my other videos if you like this video. I'd appreciate it. I do have a course involved with newer traders and also with technical analysis and trading on my website, real-crypto.com. You can check that out. And I will see you guys around. Thank you for joining me today. Have a good one.